I am Sandarajin Urgada from BSA 1B, and in this video, I'm gonna talk about the banking system. So first, let us know the history of the banking system. So first, we have this from keepers to lenders. So banking profession was first carried out by the goldsmith, or also known as the gem dealer or keeper, in medieval Europe. The idea being is that valuable commodities will be left by the owners at the goldsmith vault or whatever form of storage for safekeeping. Town residents will pay the goldsmith in the form of rent for keeping, preserving and protecting their inventory from theft. With that arrangement, the goldsmith realized that over time deposits are fair in excess of withdrawals. This means that at any given time, the goldsmith will not be running out of money or inventories of gold coins. Statistically, for every 50 gold coins deposited, only 5 of them will be withdrawn at any given time. Seeing this disparity in deposits and withdrawals, the goldsmith started lending out and asking interest from the money they do not own to begin with. This act led to the second major of bank, which is lending. So, the change in the business model of the goldsmith from taking deposit and earning rent income to lending out is actually what we know today as modern banking. Next is the loose banking era. So the money lending of the old led to banking. Taking deposits and making loans out of deposits are the usual business of the institutions now called banks. But unlike the old time, the depositors did not have to pay a fee or rent to the banker to safeguard their gold in his secure vault. Instead, they receive compensation in the form of interest, which is income in the side of the depositors. This was era with unregulated banks. There were no licenses required and there was no regulation. So after the loose banking era, we have the issuance of private bank notes. So with a simple sense of practicality, people realized that carrying large amounts of gold over long distances was not safe as well as inconvenient. This was the birth of banknotes. So the notes were nothing but a receipt of gold that had been deposited at the bank and could be withdrawn if the receipt was presented. This was the beginning of what we today refer to as the fiat money. After the issuance of private banknotes, we also have the rise of central banks. So, unscrupulous banking practice was the obvious eventuality of the absence of banking regulation. So, many fly-by-night banks came into existence during this period. This is the reason why central bank came into existence. The purpose is to prevent honest bank from losing business and at the same time to bring an order to another. Why chaotic banking landscape? Central banks were banks created by special grant to the government. They act as a banker to the government. So, central bank is a bank that is tasked by the government to control the money supply for the purpose of promoting economic stability. After the rise of central banks, we also have this fraction reserve system or the FRS. So, the banker only need to keep a fraction of the funds on deposit. Yeah, so that was the history of banking. So, from keepers to lenders to loose banking era to issuance of private banknotes to the rise of central banks and lastly to fraction reserve system of the FRS. And Now, let's talk about the BSP or the Bangko Sentral ng Pilipinas. So, primary objective is to maintain price stability, conducive to a balanced and sustainable economic growth. It also aims to promote and preserve monetary stability and convertibility of the national currency. So, responsibilities of the Bangko Sentral ng Pilipinas or the BSP. So, it provides policy directions in the areas of money, banking, and credit. It supervises operations of banks and exercises regulatory powers over non-bank financial institutions with quasi-banking functions. Now, let's talk about the BSP function. So, first is the liquidity management. So, BSP formulates and implements monetary policy aimed at influencing money supply consistent with its primary objective to maintain price stability. Second, currency issue. So, BSP has the exclusive power to the national currency. All notes and coins issued by the BSP are fully guaranteed by the government and are considered legal tender for all private and public debt. Third, lender of last resort. BSP extends discounts, loans, and advances to banking institutions for liquidity purposes. Fourth, final supervision. BSP supervises banks and exercises regulatory powers over non-bank institutions performing quasi-banking functions. Fifth, management of foreign currency reserves. So it seeks to maintain sufficient international reserves to meet forcible net demands for foreign currencies in order to preserve the international stability and convertibility of the Philippine peso. Sixth, determination of exchange rate policy. So BSP determines the exchange rate policy of the Philippines. Currently, the BSP adheres to a market-oriented foreign exchange rate policy such that the role of Bangko Sentral is principally to ensure orderly conditions in the market. And lastly, other activities. So, BSP functions as the banker, financial advisory, and official depository of the government. Its political subdivisions and instrumentalities and government-owned and controlled corporations. Now, let's move on to the classifications of banks. So first, we have the universal and commercial banks. Universal banks have the power to exercise all such powers to carry out commercial banking such as accepting drafts and issuing letters of credit, discounting and negotiating promissory notes, drafts, bills of exchange and other evidences of debt, and selling foreign exchange and gold or silver bullion, acquiring marketable bonds and other debt securities, and extending credit. Second classifications of bank is the thrift bank. It composed of savings and mortgage banks, private development banks, stock savings and loan association, and microfinance thrift banks. These banks are engaged in accumulating savings of depositors and investing them. They are composed of savings and mortgage banks, stock savings and loan associations, and private development banks. The third classifications of bank is the rural and cooperative banks. So, are more popular type of banks in the rural communities. Their role is to promote and expand the rural economy in an orderly and effective manner by providing the people in the rural communities with basic financial services. So, they may perform extend loans and advances to farmers, fishermen, farm families, cooperatives, merchants, private and public employees, accept deposits, act as correspondent for other financial institutions, create discount paper with Land Bank of the Philippines, Development Bank of the Philippines, or any other bank, act as a collection agent, offer other banking services provided in Section 33 of RA 8791. And now, let's move on to the different types of bank accounts. So first, we have the savings account. So savings account is usually the preferred choice of Filipinos when they open an account with a bank. This type of bank account is appropriate for children, teenagers, students, and young professionals who do not have huge amount of savings and stable income. Second is the checking account. So otherwise called as the current account, is a basic deposit account that is different from savings account. It requires a higher amount upon opening, and likewise balance is also higher than savings account. This is appropriate for those who have businesses as well as to individuals who have regular cash flow such as revenue, payment of expenses, amortization, and loans. Third is we have the time deposit account. So it pays higher interest than the usual savings account. Opening a time deposit means keeping your funds in the account for a fixed period of 1 month to 7 years. Fourth is foreign currency account. So it allows you to withdraw in peso or dollar or other higher account depending on what currency the account was opened. Fifth, we have the joint account. So another bank account appropriate for business partners, associations, and couples for convenience and transparency in managing their shared inflows and outflows. So what are the services offered by bank? So first, we have the accepting deposits. So acceptance of deposits from depositors or client is the primary function of bank. Banks accept deposit from those who have money but cannot utilize it in profitable activities. The second function of banks is loan services. So bankers need to lend money to the public to generate revenue in the form of interest. Third, armed services. So it replaces human tellers in performing basic banking functions such as deposits, withdrawals, account inquiries. So the following are the advantages of armed services. So first is the 24-hour availability. Second is the elimination of labor costs. Third is the convenience of location. And the fourth services offered by bank is the bank guarantee. So, customers are provided the facility of bank guarantee by modern commercial bank. When customers have deposit certain fund in governmental offices or courts for a specific purpose, a bank can represent itself as a guarantee for the customer. Fifth, check payment. So, bank provide checkbooks to checking holders. Account holders can draw check upon the bank to pay money. 6. Collection and payment arrangement. So, bank deals with different credit instruments by collecting and paying different types of credit instruments as the representative of the customers. 7. Consultancy. So, bank hire financial, legal, and market experts who provide advice to customers regarding investment, industry, trade, income, tax, and other issues of financial concern. 8. Credit cards. So, a credit card allows its holder to have purchases of goods and services on credit. So, the credit card provides immediately pays for the goods or services. 9. Debit cards. So, modern ATMs now are functioning as debit cards. So, debit cards are used electronically withdraw funds directly from the cardholder's account. 9. Item discounting of bills of exchange. So discounting can be considered as another popular type of lending by the modern banks. Through this method, a holder of bill of exchange can have it discounted by the bank. 11. Foreign currency exchange. So as service to their customers, banks exchange foreign currencies with local currencies and vice versa. This function is essential to settle down the dues in the international trade and import-export transaction. 12. Home banking. So it's the process of doing financial transactions from one's own home instead of going to a branch of a bank. 13. Mobile banking. Also known as m-banking, so it is used for performing balance checks, accounts, transaction, payments, credit applications, and other banking transactions through a mobile device such as a mobile phone. 14. Online banking. So service offered by banks that allows account holders to access their account data via the internet, also known as internet banking or web banking. 15. Overdraft. So it provides overdraft facilities to its multiple account holders or valued clients through which they are allowed to withdraw more than their deposits on account. 16. Priority banking. So it's very popular bank service today is auto debit arrangement for payment of the depositors' payables like electricity, water, communication, and credit card bills. They also offer financial consultation. 17. Private banking. So it refers to personalized financial and banking services that are traditionally offered to the bank's rich client and high net worth individuals. And lastly, we have the remittance of funds. So banks help their clients in transferring funds from one place to another through checks and drafts. The aim of this is actually to give bank clients flexibility in terms of transferring money from one branch to another. Finally, we have the bank's organization and structure. So first, we have the executives. So are the different executives that are usually responsible for specific business areas. The executive for community banking focuses on local branches and offices on the local level. Another manager may be responsible for overseeing consumer lending, which provides personal and family loans. These executives typically work closely with the board of directors. Second is we have the directors. So each executive have a small team of senior directors to closely manage business functions. So each director owns and implements the strategic vision and direction of their business unit. Third, department managers. So manager will decide how to implement direction and objectives defined by directors. And lastly, we have the bank staff. So are on the front lines and are often the face of the company to clients and the potential employees alike. So that's all for the banking system. So thank you for watching in this video, Miss. God bless.